South Africa's economy growing by a 0.4% increase in our GDP, and this clearly beating market expectations. And let's talk now to our business editor, Xolani Mbanjwa, who's with me in studio. A surprise?
Yes, a big surprise. Good morning, Oli. A big surprise indeed on the upside because of what happened in the fourth quarter of 2022. We saw a contraction of 1.3%.
Yeah.
So there were a number of people who were expecting a technical recession.
Right.
There are 2 consecutive quarters of contraction because particularly the first 3 months of the year have been tainted by the load shedding, unrelenting power cuts. And if you look since the beginning of the year, Oli, there's only been one day where we've had a 24-hour day without load shedding in South Africa. So there were those expectations because the 1.3% contraction in the fourth quarter was indeed driven by the heightened stages of load shedding that we saw up to stage 6 at the end of last year. This is a good surprise for South Africa. 0.4% is not something that is, you can rave home about at all, but it is still something. It's surprising on the upside. And when you look at the sectors that actually contributed positively to GDP, you're looking at manufacturing, which increased 1.5%, contributing 0.2 percentage point to GDP growth. And 4 of the 10 manufacturing divisions reported positive growth. And when you look at all the other sectors, 8 of the 10 sectors actually reported positive increases and contribution to GDP in the first 3 months.
That's very interesting, given that manufacturing has contributed to this positive outcome. Now, we all know that manufacturing sector, the mining sector, I know you've not mentioned mining sector, but I hope it is there. These are energy-intensive industries, and so that means load shedding is probably going to give us the worst outcomes as we look ahead to the quarters that are to come, but really a very, very good surprise, this.
A very, very good surprise indeed. And there would be those who are skeptical, like myself, because in a month or 2's time, the data is going to be collated, right, and there's going to be a revision of these numbers. It could be up, it could be down.
Right.
We could be in a contraction, in fact. And when you look at other sectors, finance, real estate, business, they increased 0.6%. So you're absolutely right. The manufacturing sector consumes a lot of electricity, and it's quite interesting that yesterday I was speaking to the CEO of the Consumer Goods Council of South Africa, and she was saying the worst thing about being a business in South Africa right now, particularly retail and manufacturing, you will find that because your numbers are good, because your financial performance is good, there is resilience in your performance. There is an idea or a thought that you as a business, you can stomach load shedding. But as we know, Shoprite is spending close to R500 million on diesel, and many other retailers as well. So yes, they are actually increasing their contribution to the GDP performance, but when it comes to what they have to go through, the money they have to spend, it's a lot. Yes, this is good, and hopefully it does not paint a wrong picture. It does not paint a wrong picture about exactly how the situation is on the ground. And month on month, we do look at data, just like yesterday, manufacturing in the month of May in the month of May, according to the S&P Global. It contracted when you look at manufacturing in the month of... That is outside this particular first quarter.
Right.
So it's something that is still to be seen whether these numbers are true, and they are absolutely there, but it's good news nonetheless, and we will take it because yesterday we also heard of the petrol price decrease yesterday. But to hear more about this, we're joined by Professor Adrian Saville, who is the economics lecturer at the Gordon Institute of Business Science, to give us a take as an economist and an investor himself on exactly, Adrian, Prof, how exactly do you see these numbers? A good surprise on the first quarter. What's your take in the first quarter GDP data?
I think that, talking about, the surprise components or the surprise elements is putting a silver lining on what is a very disappointing economic result, ongoing disappointment in economic results. Just to talk to the surprise elements, as you point out, the first is that the fourth quarter of 2022, the GDP figures were revised upwards modestly, but that says that things were, once we've got the final analysis, things were better than reported. And although it's only modestly better, as you suggest, we'll take all of the positives. And then the growth for the first quarter of 2023 shows that we avoid recession. But I want to underline uncharitably that whilst we avoid recession from a technical perspective, when we adjust the figures for population growth, we remain very much in a per capita recession. So the South African economy grows in the first quarter, depending on whether you use year-on-year or quarter-on-quarter numbers. It grows by 0.2 or 0.4%. This is a long way shy of population growth, which sits at 1.5%, and it remains the case then that although the economy has been revised upwards, came in with a number that was in line with consensus. That's always encouraging, but it remains the case that the economy is entrenched in this very, very sluggish economic growth.
Prof, it's quite clear that the economy has not recovered to pre-pandemic levels. When you look at the data, there has been a number of forecasts for 2023, Prof, when it comes to how it's going to pan out. We've heard 0.2% from the likes of the IMF, and recently we've heard that 0.3% growth for the entire year. That is forecast. How do you see the entire year as an investor and an economist yourself?
Well, if I could just come back to the point that you made about the economy versus pre-COVID, is the modest growth that we record in the first quarter now takes us above the pre-COVID high water mark. So we've just nudged ahead on that basis. But I think that is an exceptionally low bar. To recognizing that we're now saying we've achieved some high water mark versus the fourth quarter of 2019. That's 3 years in the rearview mirror. We've had ample time to be able to put in the basis for a better than recovery to that high water mark of pre-COVID. So I find that figure entirely uninspiring. When we talk about the prospect for the rest of the year, unfortunately, I agree with your synopsis that it's going to be very, very low, sluggish growth. And if I could take you to one specific number, in looking at any economic growth or economic report, very often the first number that I will go to is the level of spending on gross fixed capital formation relative to all other forms of spending. There truly is, only one way to inject sustained and inclusive competitive growth into an economy, and that's through functional gross fixed capital formation. And on that score, the economy remains a long way off the pace. We report 687 billion rand in the first quarter in investment spending out of an economy of 4.5, 4.6 trillion. When we convert that to percentages, it says that 14.9% of the economy is allocated to investment spending. For us to get anywhere remotely close to elevated and inclusive growth, that gross fixed capital formation number needs to approximately double. We need to get from 687 billion to closer to 1.2 or 1.3 trillion. So we are a very, very long way off the pace when it comes to that allocation of expenditure in the economy. And until we address that component, each of these conversations that we have is likely to be about disappointing and sluggish economic growth.
Professor Adrian Saville at Gibbs, thank you very much for your time this afternoon. Well, you heard it, Oli, when it comes to investments, we are far off and there's a lot of work for South Africa to do.
Indeed. Mbanjwa, thank you very much, our business editor there.